Your touch is fire, but it doesn't burn. It warms my soul with every turn. The clock ticks on, but time stands still. In your arms I find my will. Through the dark you light my way. A love that's here to never stray. You are my eternal flame, burning bright through joy and pain. No storm can take this light away. Forever and always you'll Through the dark you light my way.
Yes, so welcome guys to our
That's here
pre-market
to never
analysis,
stray.
and I think the audio should be coming
You
through
are
well.
my eternal flame, burning bright through joy.
Let me see. That should be okay. Check 1 2. Check 1 2. Check 1 2. Let me reduce it a little bit. To 1. Yeah, 1 is okay. Yeah, so we want to do pre-market analysis of what we'll be doing tomorrow. And again, another welcome to those who want to grow their small accounts. Tomorrow, you're welcome to our scalp session. If you have account less than $1,000, from $10 to $1,000, between $10 to $1,000, you're welcome tomorrow to our scalp session. The session is aimed at ensuring you grow your account. Yeah, before you take VIP levels, VIP tiers, ensure you first grow your account. Yeah, get your account to a level where you can have a better stop loss. Yeah, you know, when you have a small account, you will be tempted to put tighter stop loss, and you will most likely get kicked out of a really, really good market. So you're welcome to our pre-market analysis. I think I should put it somewhere as our pre-market analysis, maybe somewhere on the app. Pre-market analysis. Let me just put it right there. It's always very good to, if you want to perform better in the market, ensure that okay, let me just put this to pre-market analysis. Pre-market analysis helps you to crush it when the market opens. Yeah, you will perform well when the market opens, unlike if you don't do a pre-market analysis. Yeah, the market will be hitting you with a lot of surprises. Yeah, so let me share the link first to our team over there. You can also help share the link to your friends that you care for. Let me see if we can have the link shared on these platforms. help share the link. We need the rest of the team to be here. We don't want people to start trading tomorrow without top-down analysis. Top-down analysis is good to, it's best done before the market. It is best done before the market. And I think now we are good. We are good. All right, so since most of you are trading gold, we're gonna do a top-down analysis on gold and see what gold has for us tomorrow. Starting from tomorrow, I will be trading, I think, from London session to the end of London session. I've changed the strategy. I'll be changing strategies, and if you are trading with me live, you will also trade with my new strategies. So I'll be flipping different strategies as account grows. You remember last Friday, someone says that's good. Yeah, thank you guys for the shares. Share as much as you can. We need the rest of the team to be here, because what's going to happen tomorrow needs you to be here today so that you start like a pro. You start with proper knowledge. You start with proper understanding of what the market has in store for you. So today we want to analyze gold. I think I should switch to gold chart since most of us. So let me switch to gold live account. So yeah, so this is gold live account. And before I turn on the signals and everything, we're gonna go through what the market is doing and what we expect the market to do at the open of the market tonight. So stay tuned and share the link as much as you can. Also ensure you give the video a like as we start. So as usual, we start from top down, always top down. Yeah, so daily time frame. So let's just go to daily time frame, and let me see. I hope you can see all that on the screen. So this is our daily time frame. This is our daily time frame, and I want to show you something that you probably still cannot see, but it's very important for your trades starting tomorrow. Very important. So the first thing I'm going to show you is what we discussed the other time we were live about making use of this kind of a high just before the market starts a range. Yeah, so in that kind of a high, the market joins or gets into a range and creates another low of that high. So if you're my student, you probably know how to catch this live. So you'll pull up your Fibonacci to know the boundaries of the accumulation. So this is the daily time frame. So we want to check on the boundaries where the market was held. So you just draw from the low, swing low and swing high of the accumulation phase. Then you cover the upper bar. Just draw a rectangle on the upper bar and another rectangle on the lower bar. Then just delete the Fibonacci tool. After you have deleted the Fibonacci tool, you're left with a clean range. So this one helps you to know where the market was trapped, a region where the market couldn't live for quite some time. And this is a daily time frame, and you can see that this was around April. The market joined here on April, and it exited on September. So in other words, we've had 5 months of range. So this has been 5-month range, a very, very, very serious range. So today we're gonna introduce another tool here. Let me just introduce this tool. Yeah, so this is a range tool. So let me just delete all and show you this range tool. So I've just added a range tool. Sorry. So this range tool will help us to know a lot about this market. I'm also going to add the range tool again to, let me see if I spotted it well. This range tool is very, very, very powerful and instrumental to traders who want to get sniper entries. Let me just put that. Yeah, so that's actually the range. So that's nice. So the middle section is the balance. So if the market rises above the middle section and takes the high of the range, listen to this very, very closely and keenly. So the range, the midsection of the range is 33.37. 33.37 right here, 33.37. So if market rises and it takes the high of that range, so the high of that range I told you is the swing high and swing low that we use to draw the bars. So the swing high is there. Let me use black. Yeah, so the swing high is up there and the swing low is down here. Hope you can see all the chart. So if it rises and takes the swing high, take here means rises above. If I say takes the swing high, I mean it rises above the swing high. If I say takes the swing low, I mean if it goes below the swing low. So swing low is 31.24, swing high is 3500. Now, what is beautiful about the swing high is that it took the high of an institutional price, a psychological level in the market. A psychological level is this round number here, 3,500. If I take it to the right point, it's going to take us to 3,500. So that's where the market exited the daily range. Now, as I told you, if you want to know what's happening in the market, what you need to do is check the trend. The trend is uptrend. Okay. Do we have any opposite candle of the trend? And how did it behave? So check if there's an opposite candle on the trend and analyze it. Like, did it close with power? Like, did it close with less weak or shorter wicks? Or did it close with no wick at all or longer wick than the body? Okay, so you're looking at three things. Did the market close? No, you're looking for trend, number one. Which trend are you analyzing? Are you on an uptrend, a range, or a downtrend? So currently we are on an uptrend, daily uptrend in every higher time frame. So the second thing you're checking, if there is an opposite candle of the trend. So if you're on an uptrend, you should be looking for a bearish candle. If you're on a downtrend, you should be looking for a bullish candle. That candle is very strategic because it's going to tell you what the market was doing right there during the rest or in the lower time frame. Okay, so what you're going to do is to mark especially the body of that opposite candle. So since we are on an uptrend, we're going to mark the body of that candle that is opposite to the trend. So the candle that is opposite to our trend here is the bearish candle. So I like marking the body on a daily time frame and stepping down to 4-hour time frame to check what the market was doing at that point. So that is very, very key. In rare cases, I do mark the whole body, the whole candle, but I like dealing with the body because body with candles mean authority, and it also mean power and control. So the body will tell you who controls the market at a given time and who owns the trend, or what really happened. So since we are on uptrend, we should check what the bears were doing here. So I'm gonna step down from a daily time frame to a 4-hour time frame to just check what was happening at the body of the bearish candle. So let's step down to 4-hour time frame, and boom, there we go, 4-hour time frame. That is what was happening. Now what was happening here is very interesting because the market rose. This is what the market did. Boom. And it created a resistance accumulation phase, a short accumulation phase somewhere here. So there was resistance here. The market couldn't make it up above this level 35.60. Let me put that there. There was resistance zone created here. The bears were trying to shift control, but the bulls came, I believe this is Friday. I don't know, but I think this is Friday. So the bulls came and took out the resistance plus the previous high. So what really happened is a break of structure at this point. So structure was broken at that point with this bull candle. And what we normally want to see as good traders is a break and retest. If a structure is broken with the candle, we want to see another candle coming to retest that broken line. That is a very, very important thing. Most of the time, that retest just means the market is creating balance of the previous impulsive move so that it moves in a sequence of move, balance, step and balance. And that's the sequence that keeps a trend going, yeah? So it moves by balancing or maybe leaving tiny gaps behind. So we have this, candle here. It broke and BOS'd at here. So we call this break of structure, BOS. Now when the previous high is taken, that is a break of structure. Yeah, so the structure would be resistance, which is normally the double top. Yeah, so that's a structure. So when we talk about a break of structure, then the market has risen above the structure that would have been a double top or a double bottom. So it breaks that structure or upwards or sometimes downwards, depends where the market is moving. So we have an interesting formation. So this is what will form the basis of your trading on Monday going forward. So if you can decode what's happening here, you are set. So first, we are seeing something interesting. We are seeing a hanging man, sort of. So we can call this a hanging man based on what is happening around it. We are seeing that first, a hanging man, there has to be a trend up, an impulsive move up. Then we have to see a candle that closes with a longer lower wick than the body and a shorter upper wick. Then before we call it a hanging man type of candle, we want to see a bearish candle close beside it to the right. So if we mark all this, if we mark these three candles, it forms a hanging man type of a candle. And a hanging man is a bearish candle pattern. And if you're trading and the market is showing you that it's on an uptrend and you're getting things like a hanging man, you're getting bearish candle patterns. Don't really overinvest on heavy sells. It's just showing you that there is an imminent, a possible retracement. Yeah, it's just showing you that there's gonna be some short retracement because the market is heavily strong up. Yeah, so let's get into this. We probably need to open this using 1 hour time frame. So let's also mark the bearish candle that we currently have and open it up on a 1 hour time frame. Okay, so what you do is mark and step down your time frames. So this is the candle. So remember, we are marking the body only. Yeah, working with the body only will help you. So we are on a 4 hour time frame. If I flip to 1 hour, we should see that the market, what the market was doing during this phase. Yeah, so 1 hour time frame, boom, there we go. So 1 hour will really open this market for us. So 1 hour is telling us that this market is coming down. So this is the entire 4 hour candle. So 1 hour is breaking it to us more. It's telling us that this market is looking for a retest zone. It's looking for a retest zone. But since you are a smart student, you know the zones the market respect and how to validate the zones the market will probably retest. So we need to look for the ICT structures and any SMC system that is working and moving this market. So we already have spotted an SMC system where there was a liquidity void created here. This is a liquidity drive. The smart money entered the market around this place during the previous news. So what you need to do is to look for any gap that they left behind. Most of the time their moves are very strong and very impulsive. So you just look for things like a fair value gap and any inverse fair value gap if there was any left behind. But in our case, we have a very nice fair value gap left behind. Now, if you want to draw your fair value gap, draw it between the same candles. If you want your fair value gap to have a valid score, draw it between same candles. So if you are on an uptrend, ensure that you draw it on an impulsive move. So we can have so many fair value gaps, but now check the one with the significant impulsive move. That is where you draw your fair value gap. Then after drawing, you are looking for what will make the market really reverse from that fair value gap. Yeah, what will really make the market respect that fair value gap. So we're going to talk about that. That's very important because not every fair value gap is valid and not every fair value gap is going to be respected by the market. So it's very important that you know how to validate and how to disqualify and qualify market. Thank you guys for the follows. Follow this account. This account will make you money. Remember that on Monday, tomorrow, we are back trading live. I'll be trading on my live account on this TikTok, and you're welcome to use my strategy. We are currently on building the account. We have a group of people that are growing the account. So I also started with them with $10. My account actually closed with $120 last on Friday night from $10. So I want you also to join us tomorrow on TikTok live here. Come with your account from I think $10 plus, but it just depends if your broker allows you to use a leverage of 1 to 500. If your broker allows you to use a leverage of 1 to 500, you are able to start with $10. Yeah, but if your broker doesn't allow that, you probably need something more than that. Yeah, especially for those who are in Europe, it's very hard to trade with $10. You probably need around $100 or $200 to trade. But if you're from Africa and you're trading with, most of our brokers give us crazy leverages. So if you have a good leverage, it amplifies and speeds up your growth, especially if you're trading with, like, you're trading only sniper entries. It will amplify your entries. So you're welcome. Bring your account. If you have account less than $1,000 to probably, let's say, $10 to $20, and your broker allows you to trade up to 1 to 500 leverage, you are safe with us. You're gonna make money. You're gonna make money. Yes, you're gonna make money, because we did it on Friday. And you know, Friday is one of those days that the market is a little rigid. There's almost a break on Forex. So the market really doesn't move very well as you would want. But we are going to start afresh with you again on Monday all the way to Friday, and see how things goes. You will learn a lot. You will learn when to stay and when to leave that market. You will learn not to die on a signal that is going to give you to blow your account. You learn a lot. You learn how to grow your account to a level where now you can place a day trade signal and just be peaceful wherever you are. Yeah. So welcome. Bring your account. Someone is asking. Let me read the comments. Let me read the comments. Seems people are asking so many questions, and I have not read any of your comments. Let me read the comments. Let me read the comments here. We have Baba Lee says how to join. Okay, so currently, since we are helping those who have accounts that are growing to grow. You come here on TikTok when we go live and start trading, and ensure you also join our Telegram channel. The link is on my bio. Before you get to a premium VIP, before you get to buy our robots, come and be part of this live trading. Know how the system works, like grow your account and see how things work. Yeah, we have many people are asking for time, so this is the thing. Pay attention. This is how we're going to trade. This is how we are going to trade. I want to disqualify some sessions and qualify certain sessions with the limitations and how we are going to trade them. We are going to be trading London session open to London session close. So write that down. London session open to London session close. We are not going to trade when London session has closed. We are not going to trade New York session alone. We are only going to trade New York session overlap with the London session. As long as London session exits, we are done. We are not going to trade New York session alone. So we are going to start from London open to London close. Let's get back to the chart. So this is 1 hour time frame. The market is looking for retest area, and as a good student, you should mark your levels. Yeah, learn to do what? To mark your levels. Mark your levels. So before we move to that, I want you to have a tradition of how gold moves and the levels it normally retests. It's not very unique. Gold is not unique in how it tests levels. Check for impulsive moves and bank on them. Check for impulsive moves. For example, here we could see this. So immediately the market makes an impulsive move. That big candle becomes your candle of investment. That is the candle you want to draw your FVG at and stretch that FVG to the right to learn how the market reacts to that fair value gap. Okay, so let me just stretch it and I just wanted to observe what it did here. You see, it was coming to this fair value gap. Why? Because it is the only impulsive candles in a series of impulsive candles in this liquidity void. So this is the liquidity void, yeah? Liquidity void is an ascension or descension. Is there something like descension? An ascension, in our case, of bullish candles, or a descension of bearish candles. So in our case, we have an ascension of bullish candles, but the candle we really want is the one that was full enough, had the shortest wicks, and was the strongest amongst all. That is the most important fair value gap for us. When the market will be making a retest, it will try to stretch down to come closer to it or to mitigate it. Yeah, so you see the market really came to it because it was actually the biggest amongst the candles in this liquidity void, and it created a void that the market saw was most significant and worth of retest. So the market tried to throw a pin bar. A pin bar is a hunt candle, you see. So the market, I know most people couldn't place their stop loss below here. So a pin bar, respecting the move of the market to come to this bigger fair value gap, stopped so many people out of this market because they didn't see this, yeah? Yeah, so the market creates that void, and it comes back to balance the void, okay? So that is exact thing that happened here. So I want to show you it here. So this is the current market. This is the liquidity void that we had created on Friday during the NFP. The news was majorly weak. We only had one strong news, and what normally happens is that very good explanation. Where are you from? Continue with the analysis. Okay, so this is the liquidity void that was created, and using the same formula that we have used in the previous stage, we are looking for the biggest, fullest, and the strongest candle in that liquidity void. So the liquidity void is normally vertical move, yeah, the vertical move, or the vertical move. That's where you are looking for liquidity voids. So you look for the candle that started the move with the most impulsive drive. So in our case, if you check these two bullish candles, I don't know if, let me see if you can see them. I hope you guys can see the bullish candles. Yeah, so if you can see these two bullish candles, look for the bigger one. Bigger here means the biggest body size. So the ratio of body to wick is bigger. So bigger body than wick, okay? So here we had this one, and this is the fair value gap that it formed. Let me just put there FVG. So it created an FVG. I don't like writing FVG in red. I don't know, but I don't like writing FVG in red. Let me just give it cyan or white. Yeah, white looks better. So it created a void, and this void, listen, and I want you to be very keen. This is something that is very obvious, and you shouldn't miss out on this. I'm going to touch on very important things that I myself used to grow a $10 account last week, and many people on this channel made money growing, let me check, growing their accounts using this same strategy, okay? And you are going to make money tomorrow using the same approach. And again, plus all my fire indicators. Oh, my indicators made me easy money, like literally over 1000%. Okay, so this is the fair value gap the market is probably gonna come to. This is very obvious. this is very, very obvious. Let's first check what, let's first check the Fibonacci level of this market from where it is. So I like drawing my Fibonacci from the range. So let me just go, since we are on an uptrend, boom, and there we go. Now, if I draw my Fibonacci like that, the only point I need is Fibonacci 38. I'm gonna mark it with a line. Yeah, so that black line is Fibonacci 38, and the lower black line is Fibonacci 61. So I just want to take Fibonacci 38 because we are running on a very tough trend. So let's work with the first one, which is Fibonacci 38, a very common Fibonacci level for reversals. Yeah, so that is the most important line to look at. Now, before you make your judgment on any level in the market, try to look for relevance. Try to look for like conditions that speak the same language, like that share the same analysis with that level. Like, try to create a backup reason as to why the market will probably come to that area. Yeah. So the first is a fair value gap has been formed right there. All right. And at the same fair value gap, we have Fibonacci 38. Okay. And now this one is very important. This one is very, very important. Now check if the market, where it is coming from, it has left any psychological level behind. If the market mitigated or touched any psychological level. Now, psychological level is just a round number. So right now we are at 35.86. I may be a little different from your chart, maybe 35.87, 35.85 from your chart. But on my chart is 35.86 and I'm on a real account. So I want to check if where the market came from was a psychological level taken or reached. Now, 35.86, the closest psychological level is 3600. The closest psychological level above 35.86 is 3600. So I want to look for 3600 here. Okay, so that is the point the market touched. Let me check this again. So we had 3600.62 psychological point, a very, very key institutional pivot point. Yeah, pivot point is, you know, pivot is like the hinge where there is a possible there's a possibility of the market flipping a little bit to the other direction. So that is gonna be our pivot point. We wanna check what the market did there. The market came to 3600 and it grew weak. Now we want to study how it became weaker and how the bears entered this market. Yeah. So look at how they approached the psychological level. So look at this candle. Check this candle out. So this candle had a bigger low. See, it had a bigger wick on the lower side than the upper side and closed on a tiny body. This one tells you that the market is getting weak. Okay. All right. Let's go to the next candle, which is this one. Let me mark the next candle is this one. So the next candle, now, the previous one, we had a larger or a longer lower wick than the, let me just mark it very first. So the previous one, we had a longer lower wick than the upper wick. Nice. But what we really needed to decide whether we are going to sell or not is to see a succession of this type of candles. Yeah. Candles that have tiny bodies with longer wicks around a psychological level. Psychological level is a pivot level. Most of the time is a level where the market touches and reverses. Okay, yeah, so we have seen this one had a longer upper wick than the lower wick. That means that it had a higher rejection on the upper side. Now, who stops the market from going up? The bears. Is the bears who can stop the market from continuing up. Then again, after that, we knew the bears are trying to come to the market. Now we want to observe how the next candle closed. The next candle closed with a tiny body and a lower wick, which is really nice for us because we know that is the very, very kind of behavior or setup of a candle pattern that is called the hanging man. Okay? Remember when we started a daily analysis, we saw a hanging man somewhere. If I flip really quick to daily, you will see a hanging man. No, 4 hour. I think it was 4 hour. Yeah. See that candle in the middle? See that candle? That is a hanging man. If I remove this, you will see a hanging man. But now let's go back to 1 hour. Yeah. So back to 1 hour. This one gives us a hanging man. And the next candle, now the bears close with bearish momentum, but the market still now doesn't have the volume. Yeah. Now we have known the market has hit the psychological level and the bears are coming in, but the bears don't have volume. Remember, this was happening when the market was almost closing. Yeah. This was just 2 hours before the market closed, and this was after London session has closed. This is why we are not going to trade New York session alone. Mark this. When you are starting to trade tomorrow, we are not going to trade New York session alone. There's some observation I've made on it that is now taking it out. We are going to only trade New York and London overlap and also trade London session only. Oops. All right. So now you've learned. Hey, this thing has taken me to BTC. Okay, back. Okay, so now you've learned what happened. And again, another candle has been formed that closed bearish, longer lower wick, shorter upper wick, but it closed bearish. So in other words, the recent these three candles are giving us an idea that the market is getting weak. Okay? Then another candle comes that takes the lows of the previous three. I spoke about taking a low and taking a high. When you hear of the low was taken, the high was taken, it just means if the low was taken, it just means the market has gone below the previous low. High taken, the market has gone higher than the previous high. So it has taken all the previous low. I keep touching the keyboard. Okay, it has taken the previous lows of the three candles that were the deciding candles of the next move. So it takes the low and it is now coming down. Now we have not forgotten how we approach this market. What we're gonna do is to go back to our system of we mark the candle and we open up the lower time frames. Okay, so we want to mark this. I just want to delete everything. Now you are getting the bearish retracement idea. I hope I'm building it solid in your head. Yeah, the market is giving us bearish impressions, so this is what we mark. And in this case, we can mark all the bearish candles because now we have a succession of 3 bearish candles. So we just want to mark all these 3 and open them up on a lower time frame. So from 1 hour, you step down 4 steps. So we're going to land on a 15-minute time frame. So 15-minute time frame, and I want you to check what was happening there. Now, if you are able to decode what is happening here, you should be able to know the market is trying to make a move to create a range, and this is probably gonna be its first phase of the range. Yeah, so we're probably gonna have a high here, somewhere here, which is our 3600, and our range is targeting a rejection at this point. I hope you guys can see the whole chart at this point. Let me see. Let me check my chart smaller like that. I think I should also be looking at the screen to see what you guys are seeing. So yeah, nice. I think I should keep my structure small like that. Yeah, so this market is in its very, very early stages of a phase and is trying to get down and start forming that kind of move, yeah? Sideways move. Okay, so this is where we are expecting the market to come. But remember what gold normally does in a range. It creates a high when it is starting a range, and it comes down and also create a swing low. So a swing high and a swing low. So we can say that we have possibly created a swing high here, which is at 3600, a swing high. Now a swing low can dip as low as below this one, yeah? Now, given that this fair value gap here, it has all our gems. It has Fibonacci, it has FVG, and the same, let me just write FVG plus Fib 38. Very powerful. FVG, I don't see you here. Okay, FVG plus Fib 38, resting at the same fair value gap. Very, very key thing. And you'll see these things happen. We've always discussed this pre-market analysis, and you guys see them happen, and you'll be like, oh, I wish I could have caught that signal. This thing was analyzed, and I missed it. Now you shouldn't miss it, yeah? When you see the exact same thing replicate on your chart or happen in your chart, react to the market. Don't run away. React to the market. If you run away, the market will chase you, okay? So what we really expect, I expect the market to open and do this. Okay, so be very, very, very keen. Be very, very keen. Now we are getting into the entry areas, yeah? We are now looking for how to decide where to enter. And after this, I'll also turn on my signal indicators so that you guys can see what the signals were really like during the entire session. I literally traded with my signals and made a percentage profit of around 1200. It's actually 1250 if you deposited $10 and took $10 to 125 in within 5 hours. That means you made 1,250% return. Yeah, using my signals. You guys were watching me live here using my information. So this is it. We want to check on a 15 minutes time frame where we should possibly enter. And guys, please take our live likes up. Let's get to 20K. You can do that. If each one of you makes like 300 to 500 likes, we're gonna get to 20K, and TikTok is gonna take our live stream to the top. We're gonna be #1 because of you. Let's do it. As we move on, as you listen, let's tap the screen. Let's get the likes up. You are amazing people. We've done hundreds of thousands of likes, courtesy of you guys being there. Okay, so let's move. Now we have fair value gap and we have Fibonacci 38. Now we want to look for some other reasons why. No, let's look for entry. Where should we enter in case you're gonna start trading during Asian session? But I warn you not to trade during Asian session. There's something happening in September, so just watch what's gonna happen in Asian session. But the best session to trade is the London Open to London close. It's gonna make you money. I kid you not, it's gonna make you money. Okay, so let's try to look for a close. Now here I'll have to engage ICT concept. I've talked a lot about SMC, but I'll now tether the two. Smart money plus SMC and C, how it's gonna go, yeah? As you guys are tapping, we need to go higher and higher and higher and higher. All right, so smart money. Now, let me start with ICT concept here. Now, what does ICT concept say? We have implied fair value gap, okay? There is a level I want you guys, as I'm drawing, I want you to check closely this kind of a thing, okay? So there's something happening here, very, very interesting. We have a zone somewhere here, okay? We have a zone somewhere here. I want you to have a look at that zone. Yeah, I hope it's showing on your chart very well, nicely well, okay? So we have a zone there, okay? So it held the market, like the market was sitting on it for quite some hours. Then it broke it. It tried to retest it, but now retesting it is a fair value gap. Look at this, check this out. So on this side, now we have it as a fair value gap, okay? Now you have seen that. Now we have this as a fair value gap, okay? And look at how the market was testing it. Now this is what is very possible when the market opens. When the market opens, it can come back to it again. And this is very, very likely to happen when the market reverses back and comes. I have often seen the market rising up and making a 50 pip move to trick so many people that this market is going up. This is the trick, the trap that has been laid, and many people are probably going to fall into this trap. The market can open with a candle that will come back to this FVG and throw a pin that is probably 30 to 50 pips above the fair value gap. And many people will be tricked into entering a buy, yeah? Many people will be tricked into creating liquidity. Creating liquidity here means you have been tricked into creating a trade that has a stop loss. Remember, we said stop loss is the liquidity of the market, yeah? Stop loss is that money you are willing to sacrifice, to part with, to get or to enter that trade, or to make profit, or to hit TP of that trade. So once you have separated that money, the market can see it, they can see the stop loss. So if you enter at a wrong place when the algorithm of the market, the machine that is running the market, is still looking for volume to take the market to some direction, it will most likely suck in your stop loss into the pool of liquidity, and you'll be like, oh, I've tried my best. I have really tried my best, but it's not working. Not that it's not working, you didn't enter at the right time, you probably didn't see the liquidity, you didn't see that you are becoming part of the liquidity. And many people, me and many people, did this, and some are still doing this. In fact, over 80% of traders are entering at the liquidity areas where the machine, the algorithm, will be looking for volume, and they will most likely get hunted out. It's not really your broker hunting you. If your broker is regulated, it's the market algorithm that is running the market, triggering stop losses to take in liquidity, get enough volume to move to a certain direction. So if you don't want to be that kind of a person, if you don't want to be a sacrificial lamb, know how the market set traps. It's very important to know how the market set traps, because you will be able to only avoid traps you can see. You can't avoid traps you can see. Imagine you are driving on a tarmac road, a very long, beautiful tarmac road, but it has landmines, yeah? It has landmines, and you're driving without knowing anything. What will happen is you run into a landmine, and yeah, you won't be normal. You won't be anymore. Let's keep tapping. Yes, guys, let's go higher. I like the spirit. Yeah, so this is what is possible. I was explaining where to know or where to make your entry. Of course, I think our 15-minute gave us an entry. You can see if I turn on the indicator that I was using to trade yesterday. You remember I ended the live with the $102 from $10. Then I later on found this signal FSL, and I sold and made another $20, $23. So I closed with $125 from $10. And I'm very, very and super optimistic that this week is gonna be a whole new, having a $10 account is different from having a $100 account. $100 account opens new possibilities. It takes you to a whole new realm of possibilities. $10 limits you, like it limits you. You'll be like, now I only have to use 0.01 lot size. When will I even make $1? Yeah, you'll be asking yourself a lot of questions. But if you have $100, you are able to now make like 0. I told you guys the power of a dollar the other day. You'll be able to make things, lot sizes like maybe 0.02, 0.05, 0.07 with $100. You will see me practically do that here tomorrow. I can't wait. I'm so fired up. Yeah, I told you guys, no risks. Which indicator is that? Yeah, this is my private indicator. I used to provide VIP signals to my premium VIPs. So I also trade with them. Yeah, when I give signals, I trust in my signals. We trade together. So this is our indicator for providing signals and trading live with my followers. Yeah. So that F cell was given. I wanted to see where it gave that F cell. Look at that F cell, that signal. That signal was given after the market was done with the range. So look at the range. This was literally the range. This. Yeah? So after the market cleared the range, an F cell was realized, and I jumped in and traded with confidence. I was happy. Yeah, we are going there. We are going there, guys. Give this live stream a like. Give it a like from the bottom of your heart. We're going to take our TikTok live stream, live trading, everything to the top. We need 100,000 followers, and we need only traders. Only traders. I only want people who want to learn how to trade, people who are trading to follow me. Those are the people we can speak the same language. Those are the people we can share many things. Yeah, we only, if you have a team of people who you speak the same language, life becomes so easy. Yeah, when someone says I have problem with entries, you can easily help. In fact, many people can easily help you because you are in a room where many people had that problems, many are having the same problem. And when you ask a question like that, a problem, for example, entry, there will be so many people trying to help you on how they managed to get sniper entries. So we only need aspiring traders, existing traders here. Those who are interested in trading the market, Bitcoin, gold, Forex, indices, and everything. Traders only. And again, this is a disclaimer. If you are following Market Force, ensure that you don't follow any signal that any random person will put in the comment section. This is for the safety of my followers. Yeah, don't take any signal. Someone just comes randomly on the comment section and post, or buy Bitcoin, buy gold, sell gold, or blah, blah. Some people will come. Expect that. People will come jumping from one live session to another live session, posting signals they can't validate. And since maybe they found maybe new beginners find such signals on a platform like this, they'll be like, if that person can post and Market Force didn't warn us or didn't say anything about it, maybe that person is correct. Let's trade that signal. And they go and blow their account. A disclaimer, I'm not part of any signal shared in the Telegram, not in the Telegram, shared in the comment section down there. If there is any signal I will share, I will put it in our public Telegram channel, period. I have a Telegram channel where all my followers have joined, and if there is any signal I want to share with the stop loss, with the entry, and with take profit, I package it so nicely and put it there for my community on my public Telegram group. Yeah? So I am back fully. Someone, the video says official. Now I'm back. I am back. I am back. I went on a vacation. Now I'm back. You see, the energy is there. I told you guys you should take a little break. You should take a little break, then come back with full energy. All right, so this is what I'm explaining. Now we are on, I've turned on my signal indicator. There are actually 3. I'll be working on Mateo. I'll turn on Mateo. I'll turn on terminal version 2 and terminal version 1. They are all very fire signal. Let's get to 20K likes, guys. Let's go. So we are looking for a possible entry. When the market opens, there is how it moves against the current candle. For some reasons, there are buyers that join the market. At the same time, sellers join the market. That causes the market to move a little on the opposite, then later on come to the initial direction. So you can expect the market to go like this. But now when it's going like this, where do you expect the market to go to before it comes back down, and to where? Yeah? Where do you expect it to go to, and where do you expect it to come to after it has started coming? Okay, so this is what we are going to do. You see my indicator has already mapped that fair value gap we drew here. So it already knows there's a fair value gap existing there. But there's something interesting with this fair value gap. That's what I told you. You should be very keen with the fair value gaps that you see behind. A very important fair value gap is that one that has a full candle, yeah, a bigger candle covering it, or it is formed on a big candle. Look at the candle, okay? So this candle qualifies that fair value gap to be one of our key fair value gaps to hunt in this market, okay? Then, after that, we are looking for whether or not the fair value gap has been mitigated. So next time you see me open this chart, check for whether the fair value gap is gray or red or green. This is it. Okay, what is happening? They say they have detected inactivity. Okay, let me try to solve that again. Okay, nice. Okay, all right, so red means a bearish fair value gap. Green means a bullish fair value gap. Okay, so this is a bearish fair value gap. Now when we are uptrending, we'll be seeing this. This is a green one, a bullish fair value gap. All right, so most of the time, check if the market is leaving a bearish fair value gap, and if where it's going there is some bullish fair value gap down below. That should give you hope in life. If there is any easy signal you should ever think or imagine of, is that one that gives you such a nice setup to work with. Yeah, so this is it. We have this bullish fair value gap, and right before that we have a nice beautiful bearish fair value gap up there. Okay, let me make my drawings behave. All right, so we want to check where you will possibly make your entry in this market. So this market has not one thing. This is one thing you should write down. The fair value gap was not mitigated. Repeat that. The fair value gap was not mitigated, and the market tried to mitigate the fair value gap. then that means if you are going to make an early entry, some people are saying this is not Bitcoin. Let me try to drag the prices this side so that you can see what we are talking about. Let me drag the prices here. Okay, I think now we have the prices on the screen. You can see this is gold XAU USD. Yeah, so this fair value gap has not been mitigated, and we would really want it mitigated. But again, we have 3 moving averages. These are not just any other moving averages. There is how they work. And I want you to give these moving averages a study. Get close to these moving averages and see that they are coming together, all right? They are coming together. The moving they are moving together, the moving averages. I hope you guys can see the 3 moving averages. Let me see if you can see the 3 moving averages. Can you see the 3 moving averages? Are you able to see them? Are you able to see them? Let me know in the comment section if you can see the 3 moving averages. We have that one, we have this one, and we also have this one. We have this one here. Are you able to see the 3 moving averages? Are you able to see this 3 moving, what it means, what happens when it's not mitigated? Okay. I'll explain that. I think you are asking about the fair value gaps, how it gets mitigated, what happens when it's not mitigated, and all that. I'll explain that, don't worry. Okay, so we have 3 moving averages, and there's one there are 2 I want you to check. So now this explains why no trader has and will ever come and say they traded moving average crossover and cross under and became successful. This is going to explain just that, okay? Why you should not trade moving average crossover and cross under. That is the weakest way to approach the market, and the market will always take your money, okay? And this will also discount why you should not also use MACD to trade. There are indicators, as you are following me, there are indicators you should not even add on your chart. You should not even know them in the first place. There are indicators, it's a crime to know that they exist. You should repent for knowing that such indicators exist, because those indicators are traps. People have lost money using such indicators. That's why I make my own indicators with my experience of trading that I know is targeting a particular analysis of the market that is not so popular out there, that is not even popular. No one knows. It's me, how I think, how I've seen the market behave, how I've seen the market work, and I've seen this happening. I'll show you in the indicators. I have indicators here. I'll show you. I have Mateo, I have Terminal 1 and Terminal 2. I have Apollo Strong. I have so many indicators. I'll show you how they spot signals like crazy, okay? So there are 2 moving averages that are coming together. Pay attention. Many traders, many beginner traders and even advanced traders like to approach sales or place sales when a moving average is crossing sales when a moving average is crossing under another moving average, or buy when crossing over. A very wrong approach to the market, yeah? So right now, there are 2 moving averages that are getting together. You see, this one and this one, okay? They are very close. You probably are not able to see them, but if you zoom a little bit, you will see the upper one is a little red, and the middle one is blue, and the lower one is somewhat purple, okay? But we are concerned about the middle one, the ones that are coming together. Whenever moving averages come together, the market tries to go against it. Yeah? The moving averages cross over and cross under Coach, I hope you are recording the lecture. Yeah, this one TikTok will hold it. I'll download it and post it on YouTube. It's gonna be a big one. And many people are texting me on Telegram. I'll answer you later, guys. I'll answer you later. Yeah, if you want to DM me, we have trading tools, we have trading boards, we have trade management boards. If you just want a trade management board that will only manage your trades, we have that. We have premium signals. If you want to join our premium VIP signals, you're welcome. Just join our Telegram channel. You'll find my link in the current post. Just click that to chat me privately on Telegram. Yeah, I hope you got that. So let's get back to the chart. Yeah, so when you see two moving averages coming together, that is a setup. Now, how many millions of traders do you think know the moving average is 20, moving average 10, moving average 9, moving average 50, moving average EMA 100, EMA 200? How many? Give me a rough estimate. How many traders do you think the first time they entered a trading seminar or webinar, they were told there is a moving average, you can set its period to be 10, 20, 9, 50, 100, 200. A lot of them. Literally, every single trader adds such indicators on their chart. Moving average 20, 9, 50, 100, blah, blah. They add them on their chart. So then that means the same strategy has flooded the market. The algorithm that drives the market knows, it has been trained that when it is looking for liquidity, it is safe to look for liquidity where there is a possible crossover and a cross-under of certain indicators. So then, when you use the same indicators, you will see that you placed, when the market was crossing, you placed a buy when the indicator crosses nicely well above the other one. Moving average crossed above the other moving average, and you saw it was a nice buy. But to shock you, it will buy, but not now. The reason it won't buy now is because there are millions of traders, if not in the hundreds of thousands, that have used the same indicator that you were taught. Remember, that class reached you after it had reached hundreds of thousands of people. So the algorithm saw the same system of trade, same approach of trade. So it's not a unique system of trade. So they coded that in the algorithm because they need volume. So it was coded into the algorithm of the system. So the system knows people are trading moving average, crossover, and cross-unders. So you can't escape the market if you are trading crossovers and cross-unders. You are an easy target for the algorithm, okay? That's why you'll see after crossover, a very serious spike candle happens, or the market moves against the crossover, then later on it moves to where you saw the market was going to move. The reason is you are using an old strategy, a strategy that has flooded every street of the market. Every single user, every single trader, joining today, joining tomorrow, who will ever join any other day after, will still be told there is these certain indicators. There's no indicator to call a holy grail indicator. There's no holy grail indicator. Me, myself, I use a series of confirmations. I use Terminal 1, Terminal 2. I use Mateo. I use Luna. I use Apollo Strong to filter out noise so that I know I've gotten a signal, but it will pull back, okay? The market will pull back. I wait for the pullback, then come like a beast and drive the market after stop loss have been hit. So that's the secret. Know when the market has probably collected stop losses, yeah? Nice. So we have two moving averages here. We have two moving averages coming together, And when they're coming together, the opposite will probably happen. And the opposite means the market can come. Boom, 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 boom. And now my indicator is showing you a dotted line. Wait. This is gonna finish you. This is gonna help you. Look, let me stretch this dotted line. Let me just stretch it. I want you to follow it. Let me stretch it. I'll stretch that dotted line. Did you see what it's doing? Look at what that dotted line is doing. That dotted line is giving you an average trend line, an average area of price the market was respecting. Okay? So then it means anyone who is going to enter early, the safest stop loss for you must be above that trend line. Let me repeat that. The safest stop loss for anyone that someone will say, I just want to place a pending order. Your stop loss must be above that trend line. Okay? All right. Before we continue, let's draw another line. We are now validating and trying to look for entry. Yeah? So let me draw another line down here and just stretch it. So if I stretch these two lines, you are seeing a pennant formed at the top of the trend, at the all-time high. All-time high. We are having a pennant. Then this is what happened. The pennant got broken. Now when the pennant is broken, it can be retested. It can be retested. Then that validates our point of when two moving averages meet, there's probably going to be a move against them or against the signal. So if the moving average that I can see on the chart is trying to cross under another one, insinuating a possible sell, I see a reverse movement before that sell happens. Now, what I'm doing is I'm preparing myself for the reverse movement. I already have the maximum pips of retracement above the fair value gap. I'm also prepared to see the fair value gap get mitigated before any new move. And I also have a trend line that I believe the market should respect before continuation down. So if I am to trade this is what I'll do. If I'm placing a pending order, I'll do this. I'll say, okay, I don't want to wait till the market opens. I just want to place a pending order and place my stop loss must be above. Okay, let me reduce this. So I want my stop loss to be above this. Now I want you to study how my stop loss behaves. Yeah? My stop loss is above the fair value gap, okay? Because I already know when the market opens, it can open with a bullish kicker or a bearish kicker. I know those terms are new for some people, but just get along, just get along. The more you hear these terms is the more you'll get closer to knowing them. And when we do lesson sessions, I'll explain more about them. So let's just go. So we have our stop loss must be set above the trend line because we believe the market can open with some crazy candles. So we want to protect our stop loss. We put our stop loss above the trend line, and the trend line is good enough to rest above the fair value gap. You can see the fair value gap is below, the red fair value gap is below the trend line, and the trend line we are expecting is this upper one, okay? You can see it had the most respect, the lower one was broken, and now we can have a retest going back to the fair value gap. Then before that we enter. Now this is where the sniper, so this is just a normal trader who knows how to trade and knows the strategy, but does not know how sniper entries work. Now a sniper trader will come like this. Sniper trader wait for the market to come and make a retest here, okay? Okay, so this is how a sniper trader trades. So the market makes a retest to the trend line, and he knows that the trend line and the fair value gap are his protection. So the market comes there. He studies how the market handles the fair value gap and the trend line, and what he wants to see is the market falling again below that previous fair value gap. So he draws a line of the previous, below the previous fair value gap. Okay, that is his line. We have the line there. So this sniper wants to see the market. Okay, it has gone to the upper trend, it didn't break, and okay, it's coming down. Okay, nice. So this trader is coming to make an entry right here. Okay, he just comes and make an entry right here and puts a stop loss a little above where the market touched the trend line. You see, this trader knows something the previous trader doesn't know. Okay, this one now knows something the previous trader doesn't know. And look at this. He wants to take profit. Don't take profit all the way into the fair value gap. Now, if you're watching my indicator, you can see my indicator has mapped the low, the swing low. You can see this line here. This is the swing low, and has also mapped the all-time high around here. So you have all-time high above there and swing low. So this person is not coming to the swing low. He's smart, and he always wants to protect his profits. So he doesn't go with the market to its destination. He stops somewhere along the way, and he wants to stop where there are bodies. The bodies, the market opened previously. So this is where the markets opened previously. You can see this was the bull open right here. So he wants to just close there because he believes most likely the market will react to this weak, this region up here, but that is a good place to stop. And you see, he's exiting with 2.25 ratio. This kind of a trader will have a score of 80%, over 80% in his trades, over 80% in his trades. So this is the same strategy that we'll be using to trade a live account starting tomorrow. And someone is asking, when done, can we go to GU and dollar yen? Okay, we can check that. It's no problem. So we have that. So we have talked about entry and target. So if you're watching, we have talked about entry and target. Target is 35.79. Entry is 35.89. So entry is literally 30 pips above where we are. Yeah, and target is 35.79. So that will be around 100 pips made, clean 100 pips made. So I hope you have understood that. Let's step down to 5 minutes. Do you really have anything interesting? 5 minutes is quite noisy. I really don't trust it, but it's also good to check it. It can give you early signals if you're nice. So I can see on 5 minutes, we also had an F cell here, which was very nice. So 5 minutes will give you now the better picture of the nitty-gritties of this market. It also shows you that it also has a tiny fair value gap down there. But I see a possibility of this market curving this way, then coming this way. So this is very possible. This kind of move is very possible. Yeah, you guys prepare your accounts. Everybody prepare your account. Everybody prepare your account. Prepare your account and come to our live session. We'll be trading live. It's one of the most uncomfortable things to do, but it helps someone grow, yeah? 33.89 is said. Yeah, entry, I think. Entry 33.89, yeah. Entry 33.89, yeah, somewhere here around this level. Now, this is the interesting thing. I wanted to check on what's happening on 33.89. Tell me, this is the 33.89, okay? I wanted to tell me in the comment section what you can see happening on level 3389. Which Fibonacci level do you see there? Let me remove this. Tell me the Fibonacci level you see. Tell me the Fibonacci level you see at that level. Yeah, you see Fibonacci 61, Fibonacci level, no, 3589, yes, 3589. Yeah, so if you can see Fibonacci 61 rested at 3589, then that is a very possible return. That is where, if the market gets, you can see something like this. Yeah, around this area. So this is where you expect the market to come before you can drop down with it. Unless you guys have any question, let's see in the comment section if you have any question. I hope the voice has been good. Today we didn't have any problem with the voice. The microphone is pretty strong. Yeah, I took Rode microphone. They're amazing. And ensure you follow us and join our Telegram channel. Ensure you join our Telegram channel. The link is on my bio. Let me see how many people. Yeah, join our Telegram channel. The link is on my bio. Don't miss out. That's where we post when we are going live. Please explain the Fibonacci level, coach. Okay, the Fibonacci levels that are typically used by day traders are 2. But if you are an ICT concept trader, you can use 4. You can use Fibonacci 38, Fibonacci 61, Fibonacci 50, and Fibonacci 70. So this is 5 minutes time frame. So let me explain Fib a little bit. Let me delete all this. So I think in the comment section, you should tell me whether you have understood and have an expectation, a clear expectation of what to do or what to expect from the market at the open of the market. Yeah. So just is there any possibility of the price reaching previous high? There is. We just have a fair value gap down here that has not been touched. Okay, it's still fresh. It's still fresh. I think on 5 minutes has been touched. Let me turn on. Yeah, on 5 minutes has been mitigated, but on major time frames like 15 minutes, it has not been touched. So let's work with 15 minutes since 15 minutes is 4, is a quarter of 1 hour. So that one has still not been touched. You can see it is green. So this is the most possible fair value gap to be mitigated before we move. Do you have class for beginners? Yes, I have class for beginners. I have a website that has everything. You buy class, you attend class, you buy any class. If you want to get to advanced level of market analysis and trading, you get there. Yeah. So someone asked about the possibility of the market reaching to the high again. There is possibility if it will be able to deal with this fair value gap. We should see a rise above 3,600. Remember, these are just we had 1,000, 2,000, 3,000, and now what is right above us is 4,000, but we have hit 3,600. We can get into a range. We can fall into a range that bounces up and down between an all-time high, which is 3,600 right there, and a swing low. So what we really expect is the market creating as a swing low, which I believe can be inside this fair value gap. Then during some time it can move inside the range for some time before it breaks above the range and goes create an all-time and a new all-time high. Yeah. So that's the expectation. Gold traders, now you know what to do. Let me just check 30 minutes. I'm just cross-checking the signals. So the signal was pretty accurate. Very, very nice. Very, very nice. And 1 hour. What do you really have on 1 hour? What do you really have on 1 hour? Yeah, 1 hour signal perfect. Yeah, so basically the day traders time frame. This signal, this thing kills the market. Let me add Mateo. You know, Mateo gives us early. God, is it possible for that the upper FVG to be a bullish too? Is it possible for the upper FVG to be a bullish too? No, no. If it's a bearish FVG, it's bearish. If it's a bullish FVG, it's bullish. Yeah. So we have that in check properly well. So the signals we are going to use, I really trust in them. Let me check 4 hour. Yeah. Let me check what's gonna happen. So on 4 hour, it's not working on 4 hour. It's not giving signals on 4 hour, but I just need 1 hour and 30 minutes. Yeah. 1 hour and 30 minutes plus 5 minutes for early entries. Yeah, so that's gonna help us a lot. You know, the pressure is so big this time. I created a pressure for myself, but I'll see how I balance it, because, you know, the pressure is you need to multiply what you have by 10. So that means if you have $10, you need to multiply it by 10 to end the live stream, or to end the trading session with 100, which I did. But now the pressure of taking 100 to 1,000 is not easy. It's not easy. And the pressure is even getting bigger and bigger. Imagine when you get to $1,000, then moving it to 10,000. So I'll really work on how to balance the pressure, but already the idea is there, how to manage that without sacrificing your emotions a lot in trading. Yeah, you know, sometimes it carries emotional issues. Yeah, but with Mateo, Terminal 1, Terminal 2, Apollo Strong, we are safe. I believe we are safe. I believe we are safe. Let me open Terminal Apollo Strong. So Apollo Strong, it's an oscillator. Let me see if it's gonna open. So what this oscillator does is, it's opening. What this oscillator does is it gives me some information about that trade. I don't see that information today. Let me see. Or maybe it gives me on a live market. So when market opens live, it tells me that the market is trending or not trending, and it tells me which signals to prioritize. So that's, I think, is very key. Like, for example, you can get a sell on an uptrend, and it tells you that the market is good, the volume is good, but only prioritize buy signals. So you see, that is very safe. It checks the power of the dollar against some other assets. Then it prints the strength of the dollar or the state of the dollar, especially against what you're trading. So in our case, it is XAUUSD, that is gold dollar. So if dollar is weak, we expect a rally up on gold. If dollar is strong, we expect gold to go down. So if you're checking on the oscillator I've added down there, there is an orange moving average, a white moving average, and a bluish moving average. So the orange moving average is the is the dollar. So the dollar is down below all those moving averages, and I want you to see what is doing. It is climbing up. Okay, it is climbing up. It was down some few hours in the past, but now it is getting up. The dollar is getting up, but it's still getting up below zero, so it still have some work to do before even getting to negative 22 of strength. So that means the general trend is still bullish, but there is a possible retracement. That's what we are seeing there. There's a possibility of retracement. Yeah, you have any other question? I think we have done our best to decode and do justice to gold, and I've also welcomed you to join us in our live trading tomorrow. Remember, no risk, no Ferrari. No risk, no what? No Ferrari. No risk, no Ferrari. You know, even the parents risk to have a new baby. It's a risk. Imagine you are only used to you and your wife eating. Now there's someone who doesn't know whether you don't have money or not, and you want to live with them for the better part of their life. It's a risk. Yeah, okay, target should be here. Target should be here. Okay, so target, see there. If you enter at 89 and you exit at 79, so that's around 80 to 100 pips. Will we see 35.65? It's possible. Let me tell you one thing. Any region between inside that fair value gap, it's very possible. Very possible. Okay, you see that region? At any price you might think of inside this fair value gap during the open of New York of Asian session all through London and New York, Frankfurt, Sydney, this is very possible. And what I want you to know is that the market is probably in its early phases of retest and balancing of the previous liquidity that happened. So these regions are very possible. This is the bottom of the FVG is 35.56, and we have 35.64 is the middle of the FVG. So you shouldn't be worried. Yeah. But what you should do is to just trade with a lot of care. Ensure that your TP, your ground take profit, is 35.78. And the moment this TP, this fair value gap will be mitigated. We are now on safety measures. Yeah. The moment you see the market touch this fair value gap, the button in your brain that normally tells you to sell should be switched off and start thinking buys. Yeah. I think from where it can move. Yeah, it's very possible. This gold can possibly take us to 4,000. So it's just playing 1,000 pips up and down, 1,000 pips up and down. How can I learn how to use MetaTrader 5? You may probably Google. It's quite easy to use. MetaTrader 5 is not complex. Yeah, it's quite. You can really learn how to use it really quick. You can really, there's not too much in MetaTrader 5 that can really, yeah, but now you have given me a point. I'll make that video. I'll make that video for YouTube. Yeah, I'll make that video and post it on YouTube. Ensure you also subscribe to our YouTube channel. Yeah, ensure you subscribe to our YouTube channel. So that is for gold. Someone made a special request. Yeah. Now that we have made gold analysis, if you believe in our analysis, you can send us a cup of tea. Send your coach a cup of tea. GU or U, yeah, GBP USD, and let me just add them really quick to check the, okay. And also, let me check this side. Okay, so that one, and GU. Let's check what's happening, starting with GU. Boom. So that is GU. GU is creating a whole trough. GU is creating a whole trough. So this is what GU is creating for those who are trading GBP USD. Okay, GU is like forming for you a cup and handle. It is bullish. So first things off, GU is bullish. Okay, and it is in its early phases of the cup and handle. So it's giving you a little nice, let me draw nicely. GU is giving you a nice cup and a handle. Okay, and we also have the neck. Let me put this well. So the neck is here. So the neck is the resistance. So those who are trading GU, this is how you should approach it. Let's open it. The same strategy we used. Okay, look for an impulsive movement and check for the big candle is the candle you want to draw a fair value gap on. Okay, so this is our big candle. Okay, then draw your fair value gap on it. All right, after drawing your fair value gap like that, now you know where you'll possibly place your stop losses. And there's also something nice I'm seeing. So see, GU is giving you all the reasons to think bullish. So this one down here is, let me give you a different color. So this is an order block. This is OB. This is OB. And this is FVG. FVG. OB and FVG. Okay, we are on 30 minutes time frame. I like 30. We can also check it. So GBP USD is creating a cup and handle. Don't miss this out. Now it has already started creating the handle or that cup. Okay, now ensure that you return with the other arm of the candle. I mean, ensure that you stay so close to it that you don't miss this return, because this return will play somewhere around here and break and continue upwards. Okay, so this is a cup and handle in GBP USD, and it's currently constructing the handle, and this order block is validating this fair value gap to be the possible last area of GBP USD. Okay, so right now the market is trading inside. Let me just remove this. Now that you have known it's a cup and handle, it's gonna be like this. So you need to know that the market is trading at the equilibrium of the fair value gap, at the middle section of the fair value gap, and it's kinda received some little rejection from the middle section and is trying to create some bullish move upwards. GBP USD is not a very tricky thing to trade. It's quite very obvious. The only difference between it and gold is gold moves, and you can trade gold with a relatively small account. Yeah, so this one, this order block backs up the FVG. Now, this is how to trade what we call a block unicorn. Yeah, a block unicorn is where there are blocks in the market that pile up to hold each other. So we have order block, fair value gaps, we have mitigation blocks, breaker blocks, we have what else? Mitigation block, breaker block, and all those blocks. Okay, but the main blocks are FVG and OB. So when you see an order block, then after that you get an FVG on a momentum candle. Momentum candle is the biggest candle of that rally. FVG is formed. There is a high chance that that FVG is going to be respected by price, and price can reverse and go up from that fair value gap. Okay, then as a good trader, you want to place your stop loss to a certain point to not risk it. Okay, so a good trader would first wait for the market to rise above the waters. What do I mean by the waters? I call a rise above fair value gap or order block someone rising from the water, showing up from the water. Okay, so you wait for the market to show up here and make an entry back. Okay, so don't trade inside an FVG, don't trade inside an OB. Wait for the market to tap in there and rise back up. After you've analyzed the market and seen that the market's gonna go your way, is when you do that. This is 30 minutes time frame. You can check this across all time frames. Let's step down to let's start on a daily time frame. So let's check GBP USD daily time frame. What do you see? Tell me what you see. GBP USD daily time frame. Tell me what you see. GBP USD daily time frame. Tell me what you see. What do you see? What do you see? Okay, let's start with the pattern. Which pattern or structure do you see? Which structure do you see? Which structure do you see? Which structure do you see? What happened? My webcam went off or what? My webcam went off. Let me. I'm reading your comments. Let me check my webcam. Oh, my webcam froze and I didn't see that. What do you see? Put it in the comment section. This one is a very, very good question for anyone who is planning to trade smart. What can you see in the market? What are you able to see? Someone says double top, there's a resistance, strong support, and resistance at 1.3396, head and shoulder. Warm greetings, Mr. Innovation. And Dio says head and shoulder. HL, head and shoulders, consolidation, bullish. Okay, all right. Since my camera is not working, I don't know why it's not sending. Let me think it came back. Did it come back? Let me see if it's gonna come back. Just setting the camera. There we go. What do you see in that market? What structure can you see in the market? What can you see? Yeah, what can you see in the market? Think now the display is back. What can you see in the market? Let me see your comments. Just say it shows the net candle we already told. Reaching resistance. So this is what is happening, okay? This is what is happening. You are seeing an inverted head and shoulder. This is what you should be seeing. You are seeing an inverted head and shoulder with a neckline. An inverted head and shoulder with a neckline. Okay? Now, once you've seen that, once you've identified what you're seeing and believed in what you're seeing, now what you do is you stop checking the last two connections and remaining in the last connection. What do I mean? We stop, divide your chart like this. Just remain with this side of the chart, going this way to analyze this direction. That's analyze this direction. What's happening here? That is where your money lies. Okay, now you've known you're dealing with an inverse head and shoulder, and you need to now analyze this shoulder that has already been created. Yeah. So this is the thing. This shoulder has done very, very important things. First, it has taken this low. Okay, we need to agree as we go. The shoulder has taken that previous low, and I said taking a low means going below that low. Okay, so the previous low has been taken. So that means if that was a double bottom, then for it to really qualify as a nice setup of a double bottom, we need to see that the previous first bottom low has been taken by the current bottom. Okay, so it took the previous bottom and the market started going up. Okay, that is interesting to know. And we now have a neckline, and as we discussed, this is the daily time frame. What do? You look for your reasons. Now we have known an inverse fair value gap is a bullish pattern. Now we are looking for the market going bullish, the candles that are taking the market up. Then you want to see if we have some bearish candle forming in between them. We mark them. If they are tiny, we mark both high and low. If they are big, we only mark the body. Okay, tiny, mark both high and low. Big, mark the body only. Mark that, write that somewhere. It will help you. It will save your account. So what we need to do is, we have known the market is going up. We are coming for the bearish candle. We mark it, and what we do, we now step down to the 4-hour time frame to validate the daily analysis. So 4-hour, boom, there we are on a 4-hour time frame. We want to see what happened at that section of the bearish rest. So you can see, okay, there was a rest phase here. Okay, and the market rose. How did the market rise? Very important to know. So the market rose, but after the market rose, Okay, before after the market rose, we can see smart money concept. The smart money entering the market. Oops, my text are not black. Yeah, so smart money enters the market at that point and drives this market above the resistance, above the consolidation. They exit the consolidation. Then I want you to check for the same thing, the most impulsive, the strongest, the most well-fed candle of the SMC rally, of the liquidity void. And that one cannot be any other candle other than this candle. All right, so we are looking for a fair value gap that was formed inside of that candle. That is the fair value gap that is, oh no, that is gonna work. All right, nice. We are still good up to there. Now you see that the fair value gap was formed and it got mitigated. If I turn on the indicator, it should probably show that it was mitigated. You can see that it was mitigated. It should be gray. You can see it is gray. It is gray. So that means it has been mitigated, and there's a possibility of the market rolling back up. Mitigated fair value gap, nice. So we just draw our fair value gap here, but now we know in our mind it has been tested and mitigated. And now we wait for the market to now rise from our fair value gap to get an entry. So mitigated fair value gap, that means your stop loss must be below the fair value gap. If you are to enter this buy, let me see where you would really set up your stop loss. For example, you make an entry there, your stop loss must be below the fair value gap, and stop loss that is around 36, 37 pips. Then what do you chase? Chase something good, because now the market is approaching this. Yeah, okay. The market is approaching that neckline, and that will give you 85 clean pips of GBP USD. So people are asking, this by private indicator, it's premium. I use it to provide trade signals for my premium VIP. Yeah. Okay, so I think that is very good. Let me check what Terminus is saying about GBP USD. Let's see what it's saying about GBP USD. It gave a couple sells, a couple buys. Yeah. And let me check what this other one is saying about GBP USD. Let's see what it says. 4 hour, 1 hour. I think Mateo can really be as good in this as well. Let's see Mateo, what it does here. Oh, it's there. Yeah, so Mateo is pretty good. Yeah, I can see Mateo is really understanding GBP USD. Let me check 1 hour. I think 1 hour Mateo can give us some really good stuff. No. Let me check the other guy. On 1 hour, maybe 30 minutes. You can see it gave a buy here. Yeah, but I think Mateo is pretty good with these guys. Mateo 1 hour. Mateo 1 hour is good. Let me check Mateo 4 hour. Yeah, Mateo 4 hour is much cleaner. Yeah, if you do Mateo 4 hour, it's much cleaner. But again, this is an indicator that trades only gold. So if it gives signals on GBP USD, what I'm pretty sure about it with is the Euro JPY in the currencies, and this is its signals on USD JPY. It's pretty good. Yeah, I can say it's pretty good. Wow. Hey, it even tracks such waterfalls. Yeah, it's pretty good. It is. It is good. That's Mateo. Mateo is amazing. Mateo can crash USD JPY, but I believe in Euro JPY, it's way sharper in Euro JPY. In the currencies, it's very, very sharp in Euro JPY. Let me check. Mateo is very sharp in Euro JPY, like it gives you clean 100% signals. Look at that. It gives clean 100%, like it gives you very clean signals. Yeah, it really performs in Euro. Let's check Bitcoin. Yeah, Bitcoin is actually one of its algorithms, so it really works well with Bitcoin as well. So like it's now giving a buy on Bitcoin, and there's a buy running on Bitcoin, and I believe it's probably targeting a 112. It's probably gonna rise. This is very possible. This one is very possible with this one is very possible. It climbing here. Yeah, that is very possible. It's giving clean signals there too. Yeah, so someone is asking, where are we buying what? Where are you buying which asset? So let me put terminal. So terminal actually gave a buy. Let me delete all this. Terminal gave a buy on GBP USD already. This one here on 4-hour time frame. It has mitigated this, so expect something like this. There's a trend line here that it can touch. Okay, you see that trend line, GBP USD. Did my camera froze again? My camera, why are you freezing? It's freezing. It's going lazy on itself and it's freezing. Yeah, so expect this kind of move. Expect this kind of move before. Yeah, so we have, a trend line again inside. Let me show you something. This trend line is inside a fair value gap. If I just draw a solid line following it, you see that there is something it's telling you. You see, it's telling you it can possibly come to the trend line before it goes back. So these are very possible during the Asian Open before you make an entry. So just ensure the stop loss must be below the, so let me just map it again. Wait for an entry, return from around that point, place your stop loss, 25 pips. Let me see, no, 25 pips. What is it, 15 pips away, then target the next high. Yeah, nice trader does that. You target the next high. Remember, this is the next high, this red one. So that's where you target. That's gonna be a ratio, some good ratio. Let me see. Yeah, just expect the market to take you to a ratio of 4. Yeah, that can be a really good ratio, 4 hour. And just hold and get your 65 pips, clean 65 pips. So I think that's okay. Let's go back to a clean chart. So I hope you understood everything with gold. Did you understand gold? Did you understand gold? Yeah, so to know when we are going live on TikTok, just ensure you join our Telegram channel. The link is on my bio. Be part of that community, and I believe you're gonna grow your account as well. Remember, no risk, no Ferrari, as the TikTok community say. No risk, no Ferrari. Yeah, welcome, and jog your emotions. Put your emotions to test, yeah? Try trading live with people. Face your fears, yeah? Don't just trade in a corner alone. And no, when you trade with people, there's amount of fear that will be gone. There's amount of fear that will be gone. And when you get used to it, you get the hang of it. Yeah, when you get used to it, you get the hang of it. Yeah, I'm now feeling tired. I need to go and rest for the day. I'll download this video on TikTok and post it on my YouTube channel. Ensure you subscribe to our YouTube channel. I don't know, let me see if I can post the link of our YouTube channel on our Telegram right now. Let me see. Let me post the link to the Telegram channel so that you guys can all be there and watch the video. If there's any point you didn't get, I'm gonna download that video and post it there. Watch it again and again. There are a couple of things I've mentioned here that will work with you through your trading life for a very long time. There are things there are trading challenges that will completely go and leave you alone by just watching this video. I think it's been how many hours? It's been around 2 hours 8 minutes. Yeah, 2 hours 8 minutes of content. No, my indicator is private. It's not in the public domain on TradingView. It's a premium TradingView. It's a premium indicator that my VIPs get signals from. So if you are a paid premium VIP, that indicator processes signals and forward to the Telegram channel immediately, 24/5. If you're trading, you get the signals 24/5. Yeah. Where's my YouTube? Let me put the link on. Let me put the link there. Yeah, I found the link. So if you are joining our Telegram channel right now, you're gonna find a fresh message written subscribe to our YouTube channel to get the analysis video. Then I post the link right there, and now you have it. You should have the link should have the link. Just click the link, subscribe, and be part of that community. What pair is this displayed now? Oh, this is gold. So you probably know what to do with gold, levels to check on, what to do with the GU and levels, what to do with the USD JPY. Yeah, in case you have any question, you can put it in the comment section. We see how to go about it. We see how to go about it.
Candle flickers in the quiet night. Shadows dancing just out of sight. Your name's a whisper on the air, so still. A gentle ache I can't quite kill. I see the stars, they spell your name. 1,000 sparks, one endless flame. You are my eternal flame, burning bright through joy and pain. No storm can take this light away. Forever and always you'll stay. Your touch is fire, but it doesn't burn. It warms my soul with every turn. The clock ticks on, but time stands still. In your arms I find my well. Through the dark you light my way. A love that's here to never stray. You are my eternal flame, the dark you light my way. A love that's here to never stray. You are my eternal flame, burning bright through joy and pain. No storm can take this light away. Forever and always you'll stay. A candle flickers in the quiet night, shadows dancing just out of sight. Your name's a whisper on the air, so still, a gentle ache I can't quite kill. I see the stars, they spell your name. 1,000 sparks, one endless flame. You are my eternal flame, burning bright through joy and pain. No storm can take this light away. Forever and always you'll stay. Your touch is fire, but it doesn't burn. It warms my soul with every turn. The clock ticks on, but time stands still. In your arms I find my will. Through the dark you light my way. A love that's here to never stray. You are my eternal flame, burning bright through joy and pain. No storm can take this light away. Forever and always you'll stay. Through the dark you light my way. A love that's here to never stray. You are my eternal flame, burning bright through joy and pain. No storm can take this light away. Forever and always you'll stay.
I can't see myself. Am I there? Am I there? Let me put myself somewhere here. Yeah, that one I can sing myself. I'm a lover of good music. What's the title of this song? These ones are many. I don't even.
Shadows dancing just
Thank you guys for the gifts. Thank you very much for the gifts. Your gifts make the channel going.
gentle lake I can't quite kiss. I see the stars, they spell.
So your gifts make the channel going. And okay. And we are also happy, very, very happy. Boom, boom, boom. What else? There's something I needed to do. Okay. For you to hear me, I'll have to drop that sound. Now you can hear me very well. Yeah, so all you should ensure is that you become part of our Telegram channel and be part of the trading live trade. Train yourself to belong to the live trade community, okay? Yeah. If you can, there are fears and limitations of trading that you can drive out by live trade. Yeah. You can drive out the fear of wrong trading by trading live, where people can see you. The whole world is seeing you trading live. Yeah, the whole world is seeing you trading live. And you know, we have a team, a community of very mature, decent traders. Those who won't make you feel bad when you hit stop losses, those will encourage you and will make you feel like you're growing. You know, people feel bad if they are not growing, and other people tell them that, hey, you are not growing, you are doing bad, you are crazy, you should do this and this, you are not worthy of trading. There are people who stopped trading by, hey, let me spray my office a little. Nice. So there are people who stopped trading just because someone discouraged them for that they should stop trading, they cannot trade. So they stopped trading because they were told, they were advised by someone that they should stop trading. A very, very bad move. So keep going. If there's no one who believes in you out there, by the fact that you showed up for this live stream and all our live stream, I now believe and strongly believe that you won't walk alone. You won't walk alone. That's why I started that challenge. Everyone with a small account, you join me. We trade. TikTok is good. We have actually made our YouTube also to be just as TikTok. Literally, our YouTube live stream is like TikTok. And on YouTube, yeah, there's no difference. We have reduced the latency and the delay, everything. You know, YouTube normally delays, but now we killed that. So we are very, very, very fast, just like on TikTok. So bring your account, go get some money, and bring your account. Tomorrow, don't miss out. Don't miss out, okay? Don't do what? Don't miss out. Yeah. the person talking to you has made crazy moves, crazy trades, and I have that track record. So if you join the move, you want to see how to make your way through a crazy market like gold, how to penetrate the crazy market of gold. So tomorrow, of course, I'll be here before London session starts to look for early moves. So if you see me live on TikTok, please join. I'll be talking, so you'll see when I make an entry, just like I announced. I think I'll download that video and upload it on TikTok. I'll download that one as well, upload it on YouTube when I was doing live trade from $10 to $125 on Friday. So we're going to do the same starting tomorrow, and please join, be part of that community, be part of the team. Yeah, people made money. We traded NFP actually. Which trade do you use and why you target the VG and not order block? Okay, so I use one of the strategies called Unicorn. Unicorn is just the arrangement of the order blocks. Not the arrangement of order blocks, the arrangement of blocks. So a unicorn, a block unicorn, is where a fair value gap is preceded with an order block. Okay, so an order block comes first, then a fair value gap. So that's a block unicorn. Most of the time, if that happens, if the order block holds the fair value gap, and if that fair value gap was formed on an impulsive candle, the market always tends to respect that impulsive candle. Okay? Someone says I'm in. Yeah, tomorrow you'll be there. That's great. So the market, most of the time, I've seen that. We can back test and see that. Most of the time, if a smart money gets in and leaves a huge trail behind of a gap, that becomes our fair value gap. Then we check right below the fair value gap or above it, depends which direction we are going. We are looking for what would back up this unicorn. It's like a security wall behind the fair value gap. If you find a nice order block, that tells us that this fair value gap is actually valid, okay? But if you don't find an order block, anything can happen with that fair value gap. It can be balanced below, the market can drive through it, and it will be turned off. So if there is that kind of a setting, then you have what to bank on, and that is a block unicorn, as I call it. That's my own term, block unicorn. We have so many unicorns in the market. We have bullish unicorns, bearish unicorns. A way you find, for example, in GBP USD, we found an inverted head and shoulder. Then after that, that is the bullish structure. So, and again, we find it intertwined with 3 inside out. Now we know, okay, this is a bullish unicorn. We have a bullish structure intertwined with a bullish candle pattern. So that's a unicorn. Then you find another layer of something that joins the path. Then you get a string of unicorns. Yeah. So we have block unicorns. We have fair value. We have what do you call it? Structure unicorns, and so many unicorns in the market. Yeah. So that is it. That's how you use fair value gap in a much more modest way, profitable way. Okay. So the unicorn I'm actually talking about, I think I saw it. Where did I see it? Yeah. So this is what happens when you see smart money leaves after a bearish candle. but they will live on a very, very strong momentum. That bearish candle still holds a reason for you to trade at a fair value gap above it. So in this case, we have this one. We have this. Okay, we have this. So now you know why. For the sellers, I told you where to take your stop loss. You see, if we draw a unicorn tells us that we can get a sell, take profit to up to 35.74. You can see it tells us that there's a possibility we can sell up to 35.74. But I told you 35.79 when you enter at 35.90. No, 35 entry 35.89, exit 35.79 to ensure that you don't take the market all the way to the previous mitigation. Yeah, just let it enter and wait for it outside. After it has confirmed everything is safe outside, it's now going up, join again and go with it up. That's how to trade safely. I think it has been a great session. I don't want to take it too long. Let's meet tomorrow during London session. And again, for those who did not start with us from the beginning, we'll be trading London session from start to the end. Let me repeat. We will start trading from the start of London session. So just go and Google when London session start in your local time. Just go to Google and type when does London session start in my local time. It will show you, then work with that. So that is one thing. London start to London finish. Yeah, we want to be trading, avoid trading New York session on its own. Just trade the overlap. Avoid trading London session with the Asian overlap. Let Asian go. Okay, let me repeat that. London session will open with an overlap of Asian. Let Asian go. Remain with the London session alone. What London session do? It normally gives fake moves. Just learn the fake moves. In the first 1 hour or so, it's going to give you that fake move. Just learn how it's going. But of course, you have done your analysis. You probably know where the market's going. Don't be trapped in the wrong direction. I have questions, but I won't keep. I'll watch the YouTube. Yeah. So guys, let me end this live. I appreciate your effort. You have been so supportive. Thank you very much for the 31K likes. And Moso, I thank you for showing up to learn how to trade. When you show up to learn how to trade, you have shown up for your kids, your friends, your family, your generation. And that's a knowledge that you share and pass it on to people so that you can get more people in the pie of the over 7 trillion markup of the financial market. Yeah, it's a lot of money. Yeah, it's a lot of money. So you get your piece of pie, and train others to also be part of it. Yeah, that's how it should be. And now I say goodbye. Let's meet next time on Monday. In the next probably 15 hours, we'll back here. 15 hours, around 15 to 18 hours. Let's say 18 hours. We'll be back here, but now on a new suit, on a new gown, on a new face. We'll be now trading. Yeah, it will be a very serious room. Yeah, we'll be trading. So bring your account and let's trade. Okay? Thank you very much, gifters and everybody who participated in any way to support the live stream. you have been a blessing to the live stream. You have been an amazing blessing to the live stream. And may the market favor you. May the Forex market favor you. May you make good profits. May you be happy again. That happiness you lost when you started trading. You know, many people started trading to solve some financial situations, but you become more sad than you started. Yeah? Trading made you much more sadder than you started. Let profits follow you. Yeah? Gain favor with trading. Gain favor with this thing is spiritual. It's also spiritual. It's not only math, it's spiritual. So get favor with trading, get better in trading, and I would love to see you guys commenting profits after profits, and becoming much better in trading and much more careful. There's always room to start again. Yeah, I'm here till December holiday. I'll take a break towards Christmas, and I'll also give you an update of how the market is moving, when it is not safe to join, and blah blah blah. I'll keep you posted, but I'm here to stay. Even if I'm not around, we'll do live stream, whether we are doing it where, in the space or water or land. We'll still be doing live stream, I'll still be trading. We are here to stay. Yeah? We are here to stay. So thank you very much. Bring your account tomorrow. Trade for yourself as you follow along. And I believe you're going to make something, and you want to walk alone. Bye, and God bless you. Remember to pray before you trade. Remember to pray after you're done trading. The moment you're closing your chart, before you close, pray. Before you start, pray. It removes confusions, yeah? It removes confusions. There are confusions that are spiritual. The old ancestors who vowed that there shall never be a successful person from this lineage. Eh? That's how to deal with them. Yeah. Let's meet next time. Bye.